Good morning, I'm Clinton Griffiths. We begin with a developing story in Ukraine where leaders say potentially dozens of ships could be stuck in Black Sea ports. That's after Russia announced it was pulling out of the UN-brokered grain initiative, which has allowed millions of tons of grain to be exported out of Ukrainian ports in recent months. U.S. Secretary of State Anthony Blinken saying Russia's decision is, quote, weaponizing food. He also said this, in effect, means Moscow is saying it doesn't care. People and the families of the world will have to pay more for their food because of withholding these grain shipments, which could mean there'll be less grain on the international market and food prices will go up. Now, Ukrainian President Zelensky said from his perspective, he's seen Russia throttling back the amount of grain that's been allowed out over the past month or so.
Russia began deliberately aggravating the food crisis back in September when it blocked the movement of ships with our food. From September to today, 176 vessels have already accumulated in the grain corridor, which cannot follow their route. Some grain carriers have been waiting for more than 3 weeks. This is an absolutely deliberate blockade by Russia.
NATO and the EU are asking the Kremlin to reconsider its decision. Over the past 2 months, nearly 400 ships exported 9.2 million metric tons of corn, wheat, sunflower products, barley, rapeseed, and soy under that agreement. Grain markets jumping up to start the week. On the news, AgDay's Michelle Rook joins us. And Michelle, what are the longer-term market implications here?
Clinton, the initial market reaction to Russia officially pulling out of the Black Sea Grain Initiative was a bullish rally Sunday night with a gap higher opening and wheat up 50 to 60 cents on the highs. But grain slightly off the highs on Monday as the market tries to determine what this means longer term. The key, according to market experts, is how much export business will the U.S. pick up. Russia's suspension of the Black Sea export deal was expected by some in the trade. President Putin had made multiple threats because Ukraine grain was not being exported to the North African nations that were dependent on it. Plus, Putin's goal was to hurt Europe by withholding grain and energy.
So the fact that 70-80% of the grain was moving towards the EU, to Spain and whatnot, it doesn't surprise me he wants to just start over or just shut it down for a while.
Putin is also looking for a way to move Russia's bumper wheat crop, even offering some free to impoverished countries.
They offered, I think, up to 500,000 metric tons is kind of what the offer was to kind of offset this closing of the grain deal. But yeah, their arguments are they could export 40 million metric tons, maybe as much as 50.
However, ending the deal won't completely shut off Ukraine grain exports.
Roughly, they're shipping about 1.2 to 1.3 million metric tons of corn, as well as 1 million metric tons of wheat out a month out of the Ukraine to Poland and Romania via rail.
And he says there's no certainty the U.S. will pick up sales with Ukraine partially shut down because U.S. grain prices aren't competitive and exports are down from a year ago.
So the reality is, in the big picture, we may pick up a few more sales due to the lack of grain coming out of the Ukraine. But what does that do? Does it really change the balance sheet?
There was some farmers selling on the rally, but in this volatile market, Dueling is advising producers to make only small sales.
I'm just doing 5 to 10% on these spikes up. I'm looking at hedge to arrives in March and May for all grains. I think there's opportunities there. These are good levels. And I'm shutting the bin door on a good portion of it because I don't see how this conflict goes just so peacefully that everything flows. So I think we're going to see some opportunities later on. But
now McCormick is advising some sales because even with this bullish news, none of the grain markets were able to take out the top side of their recent trading ranges. And because, as we saw this spring, if prices go much higher, it will shut off export demand, at least for corn and wheat.